Hello again, welcome to another episode of the Uranium Market Minute. Today is Friday, May 13th. This is episode number 122. My name is Justin Huhn. I am your host. I'm the founder and publisher of the Uranium Insider Pro Newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing that you hear or see in this podcast is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. All right. Well, we made it through the week, huh? It was a tough one. Saw a little bit of a rebound today in the markets, which was good to see, and saw some outperformance of the broad markets by uranium, which is a nice change of late. So we'll run through the charts really quickly, but before I do that, let's jump in the daily scoreboard and look at the stats on flows and the spot price. Spot price of uranium is up slightly from yesterday, just 25 cents at 50.25 a pound mid-market. Not really a whole lot going on there. With spot still out of the market, they did close that gap, that discount to NAV gap a little bit today. Not sufficient to raise new money, however. Yesterday, spot raised no new money, of course, nor did they buy any new pounds. They're still sitting on 26.5 million in the treasury. Their NAVs has dipped again and now sits at 2.82 billion for the total net asset value of the Sprott Physical Uranium Trust. It closed at still a very wide discount to NAV yesterday of minus 14.49%. They did close out a bit today. They're probably still right around a 10% discount to NAV, if I had to guess prior to that data coming out. Looking at the ETFs, neither URA nor URNM reported changes to the outstanding shares yesterday. I do think that now I believe that URA has a 2-day lag and URNM has a 1-day lag. So I wouldn't be surprised to see some reporting on Monday by some share issuance by at least URA yesterday, with the pretty nasty day in the markets yesterday, decent volumes, and the ETFs were down. And it did feel like there was ETF selling yesterday. So wouldn't be surprised to see URA report that on Monday. However, if I am correct in that URNM has a 1-day lag and they did not report any outstanding shares redeemed yesterday, then that's perhaps the case. Still, honestly, with this sell-off, I'm pretty taken aback at how little of this selling was really spurred by the ETF redemptions. Really not all that much, all things considered. Let's see. Today's trading action, the shares bounced pretty sharply, did sell off intraday, closed a little bit better. Let's go ahead and take a look at the charts here. URA up pretty strongly today, over 6% on the day, 6.85% on the day, and it was trading up. It was right about 10% up in the first opening hours of trading today. So pretty strong. Volume actually pretty decent. Did sell off intraday, which obviously was not that great to see. We'll see if this is a dead cat. It very well likely could be a dead cat, seeing that trade off. I think a lot depends on news flow over the weekend, how the broad markets open on Monday. As far as the broad markets are concerned, really what has changed yesterday to today in terms of going long, really nothing at all. The only thing I would say is that just technically speaking, looking at charts, pretty oversold, reaching oversold levels. And there's so much huge volumes of shorting going on in the S&P and the NASDAQ that at any point there's even a glimpse of a relief rally, shorts cover, and you can get a good little bounce. We'll see if this lasts. I'm a little bit skeptical here, but obviously I'm long uranium shares amongst other asset classes, but pretty heavily long in uranium for fundamental reasons. So we could still have some storm to weather through here until we see a decent pivot coming from the Fed, either a softening of rates, a further decline in inflation, et cetera, or the markets just price in whatever's going on. Are the markets yet pricing in another couple of rate hikes? Are they pricing in a potential recession? Some may say yes, some may say no. Either way, we focus on uranium, right? So, and of course, we have been beholden to the broad markets here, but everything is lining up for this trade and for a very, very strong run in commodities and in uranium. Will we see pullbacks along the way? Absolutely. I've said that all along. This thing is not go up in a straight line. And I'm going to talk about the volatility a bit in the mailbag section here. Sprott Physical Uranium Trust was up almost 6% on the day, did sell off pretty substantially intraday. It was up over 10% on the day, and it got pretty darn close to closing that discount to NAV. Maybe they got to -4%, -3% discount. but sold back off. Volumes, you can obviously see we're not seeing huge volumes come in yet to the trust like we did during previous rallies. So still looking for new volumes come into Sprott. John Chapaglia, the CEO of Sprott, is on a tour right now, essentially speaking to new investors, visiting conferences, spreading the good word of uranium and of the Sprott Physical Uranium Trust. So honestly, it's only a matter of time before flows come back in. We are not seeing that yet. Kamiko also up pretty nicely on the day, up almost 7% on the day. Strong day for Kamiko. Volume ticking up a little bit over the past few days. That's a good sign. Obviously did not close at the highs of the day. So we'll have to see how we perform next week. And this is like day one of potential decoupling. So let's take a look at that chart. URNM relative to the S&P. Like I mentioned yesterday, this perfectly hit and just possibly an undercut low in terms of the performance of URNM, or a broad basket of uranium miners, relative to the S&P 500. This trend line has been a very astute place to add over the past couple of years during this bull market. And we just hit that trend line, broke below it yesterday, back above it today. So we'll have to go ahead and see how this pans out going forward. I obviously would like to see this trend line hold and to see this reverse. Even if we do see further weakness in the broad markets, the outsized beta of uranium names to the broad market really was probably one of the more disturbing aspects of this latest sell-off. Not only the steepness, but just in, with such strong fundamentals, seeing the uranium shares sell off worse than the broad markets based on essentially nothing at all other than a run for liquidity. All right, so in the mailbag section, I think I just wanted to speak briefly on the volatility of uranium and make a couple of points that I think are worth reviewing for this sector, just to kind of hang on during these volatile times, right? All right, so resource stocks, generally speaking, are quite volatile, and uranium very possibly could be the most volatile asset within the resource space. We've seen a drastic underperformance of the precious metal stocks against all odds, and against a strong fundamental backdrop for precious metals as well, considering inflation numbers, considering money printing, considering industrial use case for at least silver for the most part, and all other metals, generally speaking, making pretty strong moves over the past 12 months. Yet the precious metals are still mired with selling, and it's just brutal out there. I know a lot of people in uranium also hold precious metal stocks, so to some extent, this last sell-off was like, oh, it's happening here too. All right, well, this is nothing new. But uranium is more volatile than precious metals, and they're very volatile. So you have to know that going in. So yeah, junior resource investing, especially sub 1 billion market cap stocks, extremely volatile, especially if they have low floats, the free floating outstanding shares that are not held by insiders or institutions. You get a low float, low market cap resource stock, especially in this space, and the moves can be dramatic. The risk off market slide the past month has battered this sector. Obviously, it's taken a larger drawdown than S&P, even the NASDAQ, which has been just brutalized this year. And so uranium, at least this latest sell-off, uranium is still outperforming a lot of the large tech companies that have sold off year to date. But this slide over the past couple of weeks has been pretty steep. So I want to reiterate that you really shouldn't be using margin in such a volatile sector. And I think that what happened in the cryptocurrency markets over the past couple of weeks, especially the past week, should be prima facie evidence of why not to use margin with volatile assets. In fact, I honestly think that the implosion of a number of these coins, this Terra Luna coin that essentially went to zero, I heard that 50 billion was wiped out in a matter of days. And that has knock-on effects. And there is crossover in all of these markets. There's a lot of investors that own only uranium, but most don't. Most own a little bit of this, a little bit of that. A lot of uranium investors do own cryptocurrencies, do own assets in the broad markets, do own gold and silver, do own other volatile risk assets. And when risk is off, the fundamentals get thrown out the window and you just sell what you have. And so when you see a very, very large sector like cryptocurrency get hit really, really hard over the past few weeks, that has knock-on effects in every sector. And so I do think that that has had an effect on us over the past few weeks, especially the past week. Really what it comes down to is if you believe in the uranium story, okay, and you take your eyes off the screen, stop looking at the charts for a second, two questions to ask yourself. Has anyone offered a credible case that the production of uranium can be ramped up sufficiently to eliminate the 50+ million pound structural supply demand imbalance annually over the next 3 to 5 years? All right, so obviously we have McArthur River coming back online, although they're going to ramp down Cigar a little bit. So McArthur's coming on at 15 million pounds, but they're dropping Cigar to 13. So that'll be an additional, 12 million pounds a year starting in 2024. Maybe they'll get 5 million pounds out this year. Maybe they'll get between 5 and 10 the next year. We'll have to see. We have Langer Heinrich coming back online 2024. So there's a couple of mines in the short term, let's say short to midterm, that are on care and maintenance that are going to help to close that gap, but it doesn't fix the problem because nuclear is growing. Okay, so ask yourself that. Where is the credible case for this supply demand deficit being filled in the short to midterm? And by the way, although we are long-term investors in this space, I do believe that we are looking at very, very large moves in the commodity and in the equities in the midterm. Okay, so we're talking about the 6 to 12 month range. We should see substantial recovery, if not higher highs. And honestly, the peak of this market could be 2, maybe 3 years going out. And I don't have a crystal ball, and this forecast is always changing. But the mines coming on 2024, 2025, it doesn't really change things in the short to midterm for this thesis, especially when you factor in financial players. Unless you think that Sprott spent 3 years going after UPC only to make a good run at it for 8 months and then just kind of disappear into the sunset. If you think that, well, maybe you shouldn't be in this trade at all. All right, so that's the first question. Where's that structural supply demand imbalance going to be filled in the short to midterm? All right. The second question, is there any new evidence that more countries are turning away from nuclear as opposed to turning towards nuclear? That's obviously a clear question that we should be asking ourselves is what's the trajectory for this sector? I tweeted out today that I ponder sometimes how early we are within this trend, and not the trade, not the equities trade, but the trend of nuclear being adopted more and more. I've been talking about over the past couple of weeks about South Korea pivoting with a new president. They're now saying they're completely ending their nuclear phase out, and they're looking to restart construction on a number of reactors there, as well as build up their export business. What else did we hear? Yesterday, Uganda acquires land for East Africa's first nuclear power plant. Uganda wants to build a 2,000 megawatt power plant by 2025, or excuse me, by 2032. Either way, Uganda looking to add nuclear. Who would have thought? Then today, Singapore ponders nuclear power as it seeks to decarbonize. Now, these are obviously very large, very expensive, long-lived assets that take a very long time to construct. But this whole SMR revolution is really shaking things up, and I really think it can. And once we start to see initial adoption of SMRs, that's going to have a snowball effect because it's cheaper, it's safer, and they're smaller. They can fit into grids of varying size. You don't need to build a monstrous 1 to 2,000 megawatt unit. You can go much smaller. And I think that that's just, this trend is growing, and the UK is going all out. They continue to allocate further funds to advanced nuclear, to SMRs, as well as saying that they want to build, they want to commit to build and approve to build 1 new large reactor every year for the next 10 years. That was Boris Johnson's most recent statement that he made last week. So this adoption is happening. And all of this volatility in the markets, recession doesn't even necessarily lower demand. And now we are seeing lower demand coming from France right now, which is 75% nuclear. There's a number of their plants that are offline for maintenance that they're addressing corrosion issues from what I understand. So we're going to see a little bit of reduced demand coming out of France this year into the early part of next year. But generally speaking, recession, no recession, markets go up, markets can go down, and the demand case for nuclear is relatively static. Now, static, day over day, week over week, month over month, year over year, we're going to see changes. But for the most part, we expect that to increase due to the number of build outs that are happening, due to seeing the life extensions happen for plants that were slated to be shut down. So that's happening. And this demand is relatively static. So you got to ask yourself if you think that this underlying commodity is not going to be needed. especially when you understand inventory levels, when you understand the way that the fuel cycle works, the way that contracting works. This commodity has a very, very bright future. And these sort of shakeouts, they're going to happen. They're going to keep happening. You think that once we get through this one, then it's just it's blue skies and we're in a straight line to the top. It's like, yeah, no, that's not going to be the case. We could see a steeper rise. I mean, especially if we see further downside in the broad markets, or we see a recession happen for the next 3 to 6 months going forward here. That could mark a much deeper bottom across asset classes, and we could see a much more steady and general rise across most asset classes, and especially in commodities. So that definitely could happen, but we're going to have more violent shakeouts. We're going to have more. There's going to be 20, 30, 40+% drops. Sometimes they happen really fast like this. Sometimes they happen slower, like November to January of last year. So just hang on. That volatility is insane. I know that it's been a very difficult week. I hope that you get some rest, get some regeneration, whatever that looks like for you. For me, I'm going to be on my motorcycle this afternoon, and I'm going to be in the garden tomorrow. So that's kind of how I ground and how I shake off this pretty stressful week. But hey, we made it through. We ended the week on a positive note. We'll see what next week and the next months bring us. But with that said, everything looks really, really strong, fundamentally speaking, for this. And this shakeoff had absolutely nothing to do with uranium fundamentals. So here we are. All right. I hope you're doing well, and I hope you have a great weekend, and I will see you next week. Cheers.